in the chat and enjoy this episode.
The information contained in this podcast is general in nature and does not take into account your personal situation.
To make sure you get the most out of wealth, wine and wisdom, folks, please follow the house rules. Don't be a wallflower, get involved in the chat and enjoy this episode of Wealth, Wine and Wisdom.
Hello folks, Jason and Andy here. Welcome back, Wealth, Wine and Wisdom. Feel like a couple of Insta-famous knobheads in the airport right now, but
you know what we should do? So for those, we're coming live to you from Brisbane International Terminal. So we should do like a token wanker selfie, shouldn't we?
I don't know. I think you're messing up the show anyway. Anyway, folks, good to see you. A few of you on already, so let us know when you're on and the live stream's live. But we thought we would try and do a bit of a on-the-move Wealth, Wine and Wisdom today. We are travelling over to Malaysia and we're going to a conference over there. That guy arrived like 30 seconds ago, driving in the background. Anyway, there you go, live out in the general public. But we thought we might try and do a bit of a show on the go because we've got a flight to catch tonight at 6 o'clock, and we still wanted to go live and do our Wealth, Wine and Wisdom. I was away last week and we were both going to be away this week, so we thought, bugger it, let's see if we can go live in the airport. So we've never done this before, so let us know if you can hear us in the chat, folks.
Let us know if you can hear old mate in the background.
Yeah. Let us know if it's coming through and it's working. So there you go. Jeff's in the house. Good to see you, mate. Good to see you. We might be short and sweet tonight on the Wealth, Wine and Wisdom. You never know. We might even get kicked out of the cafe. We did sit here when we were the only ones in here thinking, all right, well, we're going to be here by ourselves, but everyone surrounded us.
So now we've got a peanut gallery.
An unintentional live audience. But anyway, welcome to the show, folks. Good to see you. How's things rolling, mate? You good for the week?
Well, we thought we'd give everyone a little bit of an update as to what's happening in the world. I think a month ago we just had a little bit of a look around the stock market to see what's going on. I had a little bit of a look around some of the more recent media commentary, and a lot of it's doom and gloom and all of that sort of jazz. So I figured, well, let's have a little bit of a look-see at where things are really at. So maybe we'll just do a quick market update and get into decanting the week.
Stick with us, folks. We'll do a bit of a market update, like Andy said, and we've got a few things to share with you. Listen, the show rolls on around in this place, no matter which party's in power. Bill and Bob and the Flower Pot Men are all in there doing their things, but our job is to help you navigate through that when it comes to being a business, creating wealth and investing. So let's do it, Andy.
Let's put a stinger on so we can go and knock this bloke off his machine.
Yeah, we'll tell him to piss off anyway. We'll be back in 30 seconds. All right, Fenton, what is on for you? What is happening in your world of markets, mate?
Well, mate, other than the day-to-day on the news channels, markets are actually really, really good. Day-to-day, they might flux a little bit up and down. We'll get that the right size that if we can.
Yep.
But mate, just everything's positive at the moment. There's a bit of negative news around, but ultimately, just a quick update is. For the month, the ASX 200 is down. Since we last spoke, it was up about 1% for the previous month, so it lost a little bit of ground from last month. For the year, you're still safe though, still up almost 10% for the year. That's total return. And total return over the last 5 years is now sitting pretty at 51%, so pretty good. Nothing in comparison to the US market, which just continues to barrel on, mate. Like it defies gravity. Tesla defies gravity as well. But the US market still up 3% for the month. 18% for the year, 97% total return for the last 5 years. So you're pretty happy if you've got reasonable exposure over there at the moment, even regardless of everything that's going on in the world of Trump and tariffs and all of the noise. Markets have been barreling along. And one of the reasons that we brought the NASDAQ in, and Jace, you might remember last time when we spoke about the NASDAQ 100, is it's got most of the tech stocks over there.
Yeah.
Right. So
Yeah.
they're the stocks that are driving the US economy. I've got a little piece later on about what are the stocks that are driving the Australian economy, but it's clear, and it's been that way in the US for a long time, that it's all the tech stocks that really drive it hard. So the NASDAQ 100 is made up of the non-financial, non-industrial stocks of the US, which is largely the tech stocks there. So if you're in the NASDAQ 100, which I am, I love it, that's ripped along at almost 2%, 24% for the year, 116% over the last 5 years.
That's not bad.
Pretty good.
Yep. I
Yeah.
like these next numbers down here. Get
Mate,
to them.
these are my favourite. Well, the FANG, so we talked about the FANG during the middle of COVID.
Yeah.
So FANG, for those of you who don't know, stands for Facebook, Amazon, Netflix and Google.
Yeah.
Even though Google's stock name is Alphabet. But that's what it stood for. Now it encompasses most of the other tech stocks. So it's a real tech index. That's ripped on. Mate, it's flying at the moment. That's 153.
Make some more noise.
We got him off the machine. Literally, I'm waiting for him to start to vacuum crumbs from our shoulders. But the FANG's up 153%. We brought the Bitcoin in there because there's a lot of talk around gold, Bitcoin. I'll start reporting on gold actually next month for everybody so that you know where the rare earths are.
Yeah.
Bitcoin up 1,000% over the last 5 years. It's
How
actually
much?
1,000. 1,109% to be exact.
That's fantastic. So you've got to be in it to win it when it comes to Bitcoin.
It is down for the month.
Yeah.
But it can be up and down just depending on what time of the day that you look at it. But it is flying. There's a lot more mainstream talk about Bitcoin now, especially in the hedge fund space. It's now becoming part of portfolios, broader investment portfolios. You wouldn't read about it. You know, this is the equivalent of like being on a farm and a horse just coming along and doing
Probably not that funny
food.
to everyone at home because they don't know what we're laughing at. But there you go. The bloke's got right behind us and using the vacuum cleaner. If you can't hear it, we can. But we'll keep charging on.
And
anyway.
so, yeah, Bitcoin is now in the conversations on hedge funds. It's daily updates in my world, mate. Like every time we go to an industry conference, they're talking about the Bitcoin in the index. Is it in? Is it out of the index? Is it a part of the portfolio? It's now becoming a mainstream part of investment management. And the more it becomes mainstream, the more that's going to push up the value, right? Because there's trillions of dollars that are invested in mainstream stock markets and indexes. And the more this becomes a part of those conversations, that will just push it up because that means more money will flow in there. So this is a real one to watch. And there's some really interesting talk around this now that it's not crackpots anymore. And maybe they weren't crackpots to begin with. Maybe they had great visions. But now there is a lot of people, Ray Dalio, all talking about where this is going to go. So we might talk a little bit more about that next week. But one that continues to defy gravity after all the negative press and stuff that he's had in the media with Trump, with contracts being stolen from him or taken away from him, Tesla just keeps absolutely banging on, up 8% for the month, 61% for the year, and almost 200% over the last 5 years.
No, in my estimation, like my feel is he's only just getting started. You know, he hasn't even scratched the surface yet. You wait till he gets Tesla robots going. The car business in Tesla is going to be worth more than the rest of the Tesla business, the automated taxi and car system. You know, the guy's just only getting started, and he just got awarded the biggest ever CEO package ever in history. I think it was over $1 billion.
Yeah, he awarded himself.
Yeah, mate, and that's the way to make money, folks. So you know, get
a massive share split.
Get a massive share split. Away you go. Well, there you go. You can make it up.
Huge
But
bonus.
you know, it's interesting numbers, big numbers in the marketplace, and you know, for those who are invested in those places,
well,
good returns.
The Tesla is an interesting one because when I say defies gravity, you know how media moves markets, right? Bad news. Trump brought in a tariff. The whole market dies, right? It doesn't happen like that with Tesla. Like it shook a little bit when he had the big fallout with Trump, but it just keeps.
Well, it's kind of like
banging
Apple,
on.
right? Like, you know, there's certain stocks and stuff. The owners of the stock, by and large, often are kind of almost true believers in a sense. You know, and it's an
like
interesting
a cult
one.
stock.
Yep.
It's a cult stock.
Yeah,
So
cult stock. Yeah, I'd call it a cult stock because
Yeah,
100%.
cult flow,
Yeah,
and that's what
yeah.
Apple was,
Yeah.
you know, back in the day.
Yeah.
And it's less so now because Jobs isn't behind it. It's
Yeah.
a mainstream
Yeah,
stock.
yeah.
Tim Cook doesn't have the same
Yep.
reputation as Jobs did.
Yep.
But it did. But certainly,
Well, Jeff's got a bit of the action. He's been in altcoins as well. So there you go. EFTs.
There's a lot of talk about it.
Yeah.
XRP, EFT, but yeah, it's crazy. So we'll jump into that next week. But of course, when you look in the media about what's going on in the stock market, because it's all positive news, my God. While September is usually the toughest point in the stock market, so they're saying embrace the September storm in the market. I reckon you probably will see a little bit of a write down in the market over the next 30 days or so, but ultimately it's going up.
To be honest, I think all this like daily, weekly fucking mechanisms, monthly, it's a fucking bunch of wank shit. Like at the end of the day, you know, I think everyone does that just to keep themselves in getting paid for paying attention to things. At the end of the day, that's just, you know, the long-term value of things is really, you know, written down by the company's performance or whatever. But this, like, oh, let's watch it for the day or the week or the month. That's not investing. That's that's gambling.
Temporary citizens. Yeah, it's gambling.
Yeah,
100%.
yeah,
but this
yeah,
is what they do every single day in the news,
Yeah.
and that's the reason why we chose to put it on monthly. And even monthly is too short to watch it, but it's interesting at least because you kind of go, what's happened in the last month that's caused that?
Yep.
But ultimately, it's about the year and the 5 year, because the short term noise does not matter when you're investing your funds.
No, and if you know the truly wealthy, you know, they own most of their assets in long plays. They go long on everything.
They're long everywhere.
Yep. And if they're doing short, well, that's just for cash flow. It's
it's
opportunistic.
For hedging. It's for hedging.
Opportunistic.
They'll hedge currencies. They'll hedge exposures. Short term is all about risk minimization.
Yeah.
And capital preservation. That's it. Everything else is a long term. They take a long term view.
Well, there's a movement right now, and it's been coming for a little while to report on property in that way. And while you know, interesting information speeding up at a certain speed gives some clarity often. You know, property is a different beast, I think, in that sort of space because of the liquidity of it, and you know, its lack of validity when it comes to the transactional nature of a property. You know, in the stock market, at least there's volumes and certain buyers. You can say, well, there would have been a million, 1,000 buyers at that price. You know, one crazy person shows up on the day and pays more than they should on the auction. Doesn't mean it's worth that, you know.
or a billionaire dies and his portfolio gets redistributed. He's heavy in indexes. And you know, classic example. And look, my belief is, I reckon property will become more like stocks, but it'll never be a stock, because it's more like, and one of the investment philosophies that we do, we use these things called private equity funds and off-market funds, which effectively they cannot be traded on a daily basis. So their unit price is struck on a monthly basis.
And it'd be much less volatile.
It's very, very stable. It's plus or minus, you know, a percent at the end of every single month. But ultimately, most of the ones that we use are somewhere between 10% to 12% annually. But you don't get the fright, and we use that to stabilise people's portfolios as well, so they don't see the day-to-day up and down, because the day-to-day up and down is irrelevant in the longer scheme of things. Like, you will not remember what happened in March 2025 when you're 65 years of age.
No, you won't, unless you sort of lost Black Friday, if you lose a gazillion dollars in one day, but it comes back up. But you know, ultimately, I mean, it's the interesting thing. You know, a quick check in on some stats in the world of property. You know, depending on which data outlet, and if it's the averages, if it's the medians, whatever it might be, but you know, the average / median price across Australia of the housing world is approaching $1 million. That's a lot of money for a house, you know. So, folks, that is here to stay. I don't think that's going to go backwards anytime soon.
No.
Certainly those markets across Australia have still got some interesting dynamics going on. But
Northern
you guys know the drill.
Bargain. Look at it.
Yeah, who wants to live in Northern Territory? But interesting.
See you in the NT. That's the slogan.
See you in the NT. But this is where we sort of sit ourselves at the moment, depending on which way you look at it. But you know, there's some interesting things. But you know, this is some stats that I love bringing up, which is the SQM research statistics, and I'll zoom in on these. This is the weekly asking price of properties, because what happens as a leading indicator, a leading measure when it comes to understanding the world of property, folks, we can we can see a very interesting piece of information that I believe you can start to forecast in the world of property is the asking prices and the changes of listing and asking prices when it comes to listing property.
Oh, expectations
The
versus
expectations.
reality.
Yeah. So ultimately, once something gets sold, that gets recorded, and we see things go on. But you can see this kind of like leading measure in the world of real estate when it comes to certain suburbs or certain types of property, where it's like, what's the median asking price of now a 4-bedroom home in that suburb? And sometimes quite easily or quite quickly, depending on where you are, you can see the jump here in housing, Andy. Like that's.
So is that the asking price that we're
That's
looking
the
at?
asking price. That's the weekly asking price movement in houses across Australia. So, folks, this is leading data. So this is leading data that will show in lagging sales.
Yep.
Because if everyone moves their expectations up in prices, then okay, well, I'm going to ask for 50 grand more, or 80 grand more, or 100 grand more. Well, that will eventually flow through, because right now it's a seller's market in most markets, because those markets are restrained or restricted. And when you have a look at the yearly across the nation and the changes, this is pretty significant stuff. You have a look at the 10-year year-on-year compounding change is pretty significant. Folks, put it in the chat if there's a few of you know these statistics. Andy, what's the compounding growth rate for property price to double in value? What percentage?
Over how long?
If it grows for a property to double in value, what's the percentage? Because we're going to work out the year, how many years it will take. If a property doubled in value, 7% would take 10 years.
Yeah. So
you check this out. Houses 7% doubling in 10 years. That's pretty massive when it comes to. That's pretty huge. The last 10 years, by and large, now not all houses get the uplift like this.
Would that be different over the last 20 though? I wouldn't imagine it'd be too much different.
Certainly different over the last 20. It's a bit more elongated, but not a bad number.
40, it would be pretty close.
Yeah,
it would have to be pretty close.
But if you have a look at those numbers there, 12 months, 9, 8, 8.8, not bad little compounding outcomes with your property world, right? So that's not too bad. And apartments are behind, always will be. They don't have land content in that way. Rule of 72, you're dead right, Courtney. Good job. Apartments don't have that compounding effect when it comes to the land plus the building, but they're coming into their own right now when it comes to the location for what you get, and actually the cost of ownership. I think is going to play into the growth rates in the future. Certainly houses are going to be, I think, for the rich, unfortunately, Andy, in the future, and apartments and townhouses are going to be for those who are starting out.
Well, I mean, that's the way that it is everywhere in the world.
Everywhere else in the world, right?
You go to any place that's reached a reasonable critical mass of population, cities, apartments, townhouses, you're a multi-millionaire.
Yeah.
You're very, very wealthy to own a townhouse. But Australia's a little bit different because
I think we get a bit myopic in Australia when it comes to, everyone deserves a house. Well, go somewhere else in the world that's got an actual population.
They get passed down intergenerationally.
Intergenerationally.
People can't afford to buy them.
You never live in a house, or you might rent for life, or whatever it might be. So, that's possibly on the cards for Australia. I think we've still got another 50 years of possible good planning if we actually get anyone with some fucking common sense in our political in our world. But you never know.
They're messing it up so badly at the moment. That maybe that 10-year trajectory of Labor, maybe it won't continue because they're doing a good job of messing it up.
But listen, folks, literally, you guys have heard me say this from 2019. It wasn't COVID, but these 2017, 2018 APRA. A bunch of moves by a shit government started the problem, and then COVID put the nail in the coffin when it comes to the number of properties available in Australia. Construction and new properties struggled.
Yep.
And I've said this for 1,000 years, and it'll be true. These are our new normals, Andy. This is our new normal.
You know what we really need to do is we need to go back, and you need to go back and have a look at the first one or two versions of Wealth, Wine and Wisdom, because Jason said this literally at the beginning of COVID when everyone was shitting bricks. He's gone, if you don't buy property now, you're insane, because there's an absolute storm coming, and it was 2 years, 3 years in front of everyone else.
And mate, they played right into the strategy too. They started giving money away like drunken sailors, which is like, yeah, okay, that's going to push prices up.
I know. But for those who bought a widescreen television, they were out. Those bought the property.
Yeah.
Almost 30-40% increase in a year and a half.
It went crazy.
Bananas.
And you can see the vacancy rate. Like, have a look at the vacancy rate. It is at, literally all-time lows.
But aren't they going to fix that with build to rent?
Yeah. The rents, but this is an interesting one. This is kind of like, for most of my career, rents travelled up slowly because supply was okay. And then when supply shit the bed, have a look at what happened to rents. Insane.
This is an inflation thing, though.
That's right.
And anybody who thinks, and this is the bullshit that most people believe, is that because that number, property prices have already gone up.
Yeah.
People have already paid that,
yeah.
right? Now, the only way that you can change that dynamic is to make property prices fall. But if property prices actually fell, do you know what that would do to the economy?
It would be horrible.
Absolutely blow the economy up.
Yeah.
It would destroy the economy.
Yeah.
So anybody who's young saying, oh, no, we need to bring the housing prices down, it's dumb, and it will blow up your world, it'll blow up our world. It's not going to happen. And so they're just going to lie to us in politics and pretend like they're dealing with the issue. But they know that they can't bring them down. All they can do is slow their growth. And maybe that's a good policy, but they're miles away from being able to even find out what that policy is.
I prefer for most people to have a slower growth marketplace that actually has some sense about it, right? Some sense about it.
People
good quality property wins, rubbish quality property loses. Those types of developers lose money. They get expelled from the market. A property market where everyone wins, no matter who's in the game. Like, you just get scumbag creators of real estate.
Well, this is where spruiking lives, isn't it?
Oh, mate.
Because everyone, you can throw a dart at a map, and you can buy a property in that area and it'll go up.
I can tell you, if you build with the wrong builder or developer, you'll end up with something absolute crap because they don't care at the moment. And the prices, the construction costs go up. These are some of the challenge that everyone faces. But this is these charts don't lie, folks. And what does it mean? There's a problem. We have a problem that needs to be fixed for the general population. Everyone needs to be have somewhere to live. But this is the number of the rentals, and like we're literally down half. 40%. There's less rentals. But guess what? Here's what happened. The genius of these governments said, all right, well, you know what? What we'll do is we will increase the population, though. We'll increase the population. That'll fix everything, won't it? But no, it did not. All right. There's our completions. This is our population boom. We were already behind the 8 ball anyway. It was falling, and continue into the future. It's only going to get worse. Now, this is the thing, right? When you have a look at this, we got 27 million people in the country right now. Here's where we are, 27.2 million. Now, when you have a look at some of these stats, I'm going to show you in a minute. Keep an eye on. They probably go back to like somewhere 2000. We had 20 million, and then 1990 we probably had about 15. And let's say come back to 1960 there. So sort of 12, 15,
There's no real
20,
wild jumps
right?
in that graph, though.
No, but check this out though. You've got to follow along with this stuff in the graph, right? So when you have a look at some of these things, have a look at this. This is the dwelling approvals, right? Since 1985. So let's go back here. 85. So 85. Call that. What do we? Let's call it 15 mil, Andy. 15 mil. So from there we had 15 million people. Now we have 27 million people. Follow along follow along in the maths here, folks. If you can't see this,
This isn't political maths either, because it doesn't work the same way.
No, I mean the politicians. I don't think know how to do this mathematics. But look,
1 plus 1 equals.
here's
a house
our
for every
average
Australian.
delivery, right? We haven't been able to deliver any more properties. This is the dwelling completions. Here we go. Like, look at this. We've never been able to complete 240,000 properties ever in Australia's history, ever in Australia's history, ever. Never been delivered, ever, right? Okay. And look at the average, kind of, maybe tracking along here. This is where we actually got our shit together. Right? We actually got our shit together. We're like, yeah, we can start to deliver.
Yep.
But you know what? When that happened,
times got too good.
everyone fucking carried on like pork chops and chased all the investors out of town. Right? Yep. This is what happened, folks. You got to be careful who you vote for. But guess what happened, Andy? Our population from here, 15 million to 27 million. Is there any improvement? Is there any improvement, folks, of our ability to deliver property? Right? We're still delivering the same amount of properties per annum we did in 1980. 1980.
I think it makes sense that
ludicrous.
We then consult with India on how to make sure that we keep housing at the same pace of population, because they've done it very well, haven't they?
But here's the drill. Like, now, I do not in any way, shape or form chip a hard worker. I can tell you that. But listen, when a tradie, when a bricklayer is making more than a doctor.
Was it $35 a brick?
Hey?
I think that I saw that recent stat recently.
It was $3.50 a brick, but you can make $250,000 to $300,000 a year laying bricks. Now, when the world's upside down like that, folks, we've got a problem. Now, I don't chip anyone who works hard. My father worked hard for a living, and when I actually was a bit younger, I was in the building trade as well. It's hard yakka. But it might be a little bit upside down.
But it's the economics of it, Jace. It doesn't work.
Yeah.
Because people might hear that and go, "Well, that sounds harsh." But the reality is, if the highest paid people in the world are the ones building the houses, then nobody can afford to buy the house because they're the highest paid. Yeah. So there's a natural, and we all sit in it, mate. Like you, me, all of our industries, we have a natural bracket of where it makes sense over a long period of time for us to sit.
Well, if you go back to, if we do a little bit of throwback time, I remember, I don't know if you remember me saying this, but there was a lot of people saying, "Oh yeah, but we'll be able to do that cheaper or whatever." Property prices will never be cheaper in Australia, and here's why. There's two places in Australia are the most isolated countries in the world: Australia and New Zealand, right?
Some would say New Zealand's got it on us at the moment. Yeah.
Or then maybe Antarctica, right? Yeah. Whatever, right? So, but listen in, folks. There is nobody anywhere near us in the world on a landmass that Australia will import as a cheap labour source.
No. Tasmanians. But now their price has gone up as well. So, unless we get dolphins, and it's not going to happen.
Not going to happen. So everywhere else in the world has an ability to tap into some cheap labour source, and when you don't, your construction prices go through the roof, right? You go check anywhere else in the world. They've even got a population big enough where there's a severe difference in the economic reality for most people, but Australia does not. And we've gone so far the other way that we're not going to solve this construction crisis. It's not going to happen. And now they're giving away our homes. Like I said the other day in Wealth, Wine and Wisdom, they're giving our 20 years of property away to American companies and other global companies that are going to keep that wealth for 20 years. Fortune. And now look, check this out.
Because they see the dynamics. They go, such a short supply, we'll come in, we will make an absolute fortune even if we fuck it up.
Well, here's the drill, India's going, oh, we'll fix it. We'll bring people out. And this is...
It's like, if you get the next door neighbour to help mow your lawn, have a look at his yard first. It's generally a typical thing. Do you know what I mean?
Mate, and it's insane. So that's my sort of market update, Andy, for today. Listen, I would like to have some different things to say about our about our property market, but my forecast is this, folks. Interest rates have had a few small cuts. We might get another one or two before the end of the year. It's only going to accelerate our property market. And then the government has done, again, some inflationary moves with this
also the average wage, right? That's gone up.
Yep.
That's gone up, which costs businesses more money. So and here's the reality behind it. If you don't import cheap labour, you need Australians to do cheap labour in order to keep the cost of houses down.
Yep.
Now, if you don't allow that because you put a bottom on what you can pay Australians, then that is inflationary. That increases the cost of a house. So if you've got a labourer who needs to earn what's known as the award rate, right? The award rate just went up and is going up again with inflation.
Yep. And you know, you don't chip anyone a salary or whatever it is, but at the end of the day, you know, if the ability to build a home costs more than, you know, a doctor or a lawyer or whatever it might be, arguably Andy, at the end of the day, I think some of the chippies are more fucking useful than a lawyer, just between you, me and the gatepost. Maybe we should pay them less and we'll just get shit done in a quicker period of time. You might be right, then we might be onto something there. But listen, at the end of the day, I don't see it being fixed. What does that mean for you and I and our clients? Well, folks, get your property, get good quality property in your portfolio, and don't worry about it. Get a good position. There's some places that are moving, momentum markets. You've got your Perth, you've got your Brisbane. You know, Sydney's probably for most of us.
Long term.
Yep, yes. Long term, medium to long term. Not a bad market if you haven't got a bit of New South Wales. You know, there's a buyer's market right now in Melbourne. Not because of the fundamentals of the property world, but because of the political brain deadness down there. That will change. We don't know when. So, you know, there's buyers, but you know, by and large, it's still not going to go backwards in any significant way. So
it's hard to get shit out of Victoria, isn't it?
Well, I mean, you know, there's plenty of good stuff in Victoria. I like to give it a bit of a beating because you live there, because that's. But you know, other than that, it's a great state to live in. It's a proud, beautiful state, wonderful people there.
AFL, cricket,
yeah,
Grand Prix.
Mate, you know, it doesn't win 7 years in a row the best city to live in the world, and then all of a sudden, doesn't become that. Like
Dan Andrews came in.
Yeah, you know, I don't know why you guys gave him a fucking statue, but anyway, but you know, but there you go.
Not built yet. Like you say that. Even the birds need somewhere to shit.
Giving the birds something to shit. But what's going on here, mate?
So team,
tell me about the wine.
So team, whack it in the chat if you guys know what I'm about to talk about, or if you know what these 5 wines are. 5 is the clue here. So does anybody actually know? Whack it in there.
All
if you know what these
Andy's
wines
are. Does anyone know what he's going to talk about with these 5 wines, other than he wants to drink them? Most likely. I'm sure he would like to, but I'm sure it might have an investing angle on this.
It certainly does, mate.
Yep.
It certainly does.
Yep.
And now is the time. But
now's the time. All right.
Tell me more.
Let me
read the names out. We've got on the left, we've got Chateau Aubryon. Then we've got Chateau Margaux. Then we've got Chateau Latour. And then we've got a conspiracy theory wine, 2 of them. We've got Mouton Rothschilds and Lafite Rothschilds.
Uh-huh.
So can anybody tell me, and if you can tell me, I'll send you a bottle. No, I won't.
Watch out, they might get it right.
Can anybody tell me what these wines have in common? Do you know what they've got in common, Jace?
Are they all from France or something?
They are, yeah, that's one.
Hey, there you go.
What else have they got in common?
That's as much, they're the most expensive wines on the planet.
That they are. I thought you were about to say they're all red.
That's the easy answer. There you go. All right, tell us more. That's a lot of chateau, right?
That is Rosie. Yeah, Rosie. That's a hell of a
They're
lot
all
of
chateau something. No?
Yep. Well, they're all Bordeaux wines.
Bordeaux, all right, okay.
And
that's somewhere in France, I understand.
It is. It's a region in France. These are some of the oldest wines. They're called the First Growths. They're all red.
Rosie, you're on it. You're on it, Rosie.
Rosie's got it. 5 toppled leads. Well,
maybe.
Maybe.
Interesting.
Maybe. Jeff's got something to say here.
Hey,
well, everyone thinks
they're absolutely collectibles.
that they rule the world, and potentially they do. So these are known as the five firsts, the five first growth wines. So these are the premier wines of France, right there. If you look at the big boys, these are the ones. These are the Schumachers, the Etten Centers. These are the biggest names and the biggest wines in the world.
Biggest names in the business.
The reason why I was looking at it, because it's been a little while since I've jumped into it, and we were investigating putting a wine fund together a little while ago. We almost did. We held back for a little bit. And then I saw this in the Fin Review, and it's gone, Australians can now drink rare wine, Bordeaux wines, and this bloke tried $30,000 worth of wine. I thought this would be a great read, Jace, to be fair, because I thought, we'll get a lot of investing tips from here. No, it was just some kunz from the Financial Review telling everybody that he drank the 5 big wines of the world. But let's have a look at what happened. This is a reasonably phallic graph here. So what we're looking at here is Cult Wine, which is now a major wine investment company, and they create indexes based on wines, right?
Really?
So just like a stock market indexes are made up of maybe 100. The ASX 100 is made up of the top 100 companies in Australia, and the index moves up and down based on their performance. This is the same thing with wine now. They've been doing this for about 20 years, I think, pretty close to 20 years. And so coming into 2009, you can see that the 2 major ones that win here, Lafite and Mouton Rothschild, so they're both the Rothschild wines. Right. They're next to each other. I have no idea why the phallic graph there was a big China boom on wine at this point in time. Huge China boom on wine. This is when China was actually going quite nuts. But team, the performance of this, remember when I talked about the Australian Stock Exchange over a 5-year period and giving you around about a 50% investment return? Well, if you have a look from say 2016 to 24,
Do the math for us, Benton.
it's a little bit longer, but even the lower performing wines have done 50%. So what you could do, Jace, is you could actually buy one of these wines. There's some tax advantages to buying them.
Tell me more.
Yeah. And when you drink them, you don't pay any capital gains tax. So there's an investment that is capital gains tax free. Right?
To enjoy.
Now, whether we could claim a capital loss through consumption.
I wonder. Now you're talking. Fenton's getting exciting, right?
Yeah. No, you can't. You can't. But imagine
well, I reckon you could, because we're flying over to Malaysia, and we're going to work out what you can do and can't do. And we're offshore.
Well, it's one of the reasons that we're going. We're getting a bit pissed off with how they're managing things over here.
Yeah.
But this is the part that I'm excited about, because we hit a peak shortly after COVID. COVID sent the prices going wild, right? Again, but they've come off quite substantially. Especially Rothschild wines have actually come off a significant amount, which means maybe it's time for us to relaunch the wine fund.
I'm down with it.
Because it's come off a fairly significant margin. It's trending in a downward direction. It's in sort of free fall at the moment, but it's not going to remain like that forever. And the reason why I wanted to bring this up is because 3 reasons. Gold, property, wine, what do they have in common? Whack it into the chat. What do they have in common, Whitten?
Gold, property, and wine. I don't know. I need to phone a friend on that one.
Well, think about it this way. How much land is there? Is it infinite?
Well, no, but
How
it
much
depends. I mean,
gold
there's
is
plenty of dirt out in the universe, but you know.
Right. But it's scarce. So all of these things are scarce, right? So there's only so much of it that can
there's
be
a restricted
produced
supply.
at any point
There's a
in
restricted
time.
supply.
Right.
Yep.
And so there's a natural gravity, or there's a natural investment environment for them. Wine, it gets consumed, and therefore there will never ever be as much wine. Happiness. I like it, Courtney.
Well,
there will
that's
never
the
be
thing.
more of
Yeah.
it.
Yeah.
And wine is a classic example of this. Like I was trying to find the graph beforehand, but if you take a look at any of the 5 major wines, at almost any time you buy them,
Chris got it. There's only so much supply.
Correct.
Yeah, good work, Chris. Yeah.
is what happens with wine. So you get an Obrion, right? a 95
Cut to the
Oberon.
chase, mate.
I'm getting there. A 95 Oberon. Do you know what the value of that wine does? It does that. Right now, it might have a couple of. It never gets cheaper until the wine dies. Now that's the only difference, or that's the key difference, because a wine gets too old and it dies, and when it gets too old and it dies, it's worthless. But otherwise, it's the same market dynamics that drive property, that drive gold. It has other things that that can influence where it is on a day-to-day basis, but there will never ever be more of it made. Right, and so while it's still good quality, it continues to go up in value. And so, other than the fact that wine can die, it's a classic example of how scarcity actually works in markets. Bitcoin, same principle.
Well,
It's
what have they
scarce.
got, 1 million bitcoins or something, or whatever it is?
Mining period,
Yep.
so there's only a scarce amount of it, so
Yep.
it will only ever go up in value. Property to a certain degree, if they're not releasing anymore, it's scarce, it continues to go up in
Well,
value.
the scarcity is, certainly based in and around location stuff as well. So if you go, right, it's located, a certain area. Yep.
Same as a fine wine.
Yeah, yeah.
They're all from the Bordeaux.
Well, not the ones up in Brisbane.
Zero
At Sierra, mate. Now, I had a great time at Sierra, mate, but you might not be paying $30,000 for that bottle.
So-
but there you go.
This is something that we're going to be talking about in a few years' time, because this is the live X Fine Wine 50, which is basically an index of those 5 wines. And mate, it is tanked more
Say
recently.
those negatives don't show a good picture, but it's a good opportunity.
It's a really good picture to me,
Yeah,
mate. This
yeah.
shows a great
Yeah,
opportunity.
but do we get to own the bottles? I think I just want to own the bottles themselves, not necessarily an index.
Well, if we want
Because
to
we
own
can't
just
drink
the
them if-
bottles, we can buy a full one. We can drink the wine, and then you can keep the bottle.
No one will know.
No one will
No,
know. Just
I
fill
love
it up like the old days when
Yeah.
you did with your
Yeah.
dad's bourbon bottle. So, mate, anyway, that was a little
like
bit.
that.
That was a little bit of something, and I'm not joking here. This is something that I'm back in the market in. I'm kind of looking at it. I'm going, okay, well, if the
Well,
five,
it's part of the action. It's part of the action.
Yeah.
Wine has performed very well over a long period of time when it comes to returns and investment.
absolutely.
Yep. You're dead right.
Actually, my uncle had a student at Greenwich University who did a study on this, and there was only 2 indexes. So this was 10 years ago. There was only 2 indexes in the world at that point in time that had outperformed his wine index.
There you go. It's all right. Well, what else is going on, Andy?
Well, mate, there's a few interesting things here. So this is an interesting headline that was in the Fin review. I'll just switch that down. So major super funds. So there are a couple of themes here, right? Major super funds in Australia are hedging or selling down assets because they are forecasting a US currency drop, right? So if you're planning on going to the US, it might be a good opportunity to go at Christmas time because the dollar might be a little bit cheaper. But the
That'd be
major super funds in Australia are now hedging their positions to the US dollar, believing that it's actually in decline. And here's the great oxymoron, right? The best stock market returns in the world, anywhere at the moment, maybe other than some fudge numbers in China, are in the US. So how do you buy US stocks when their currency is potentially going to fall in value? So their market is going like that, their currency is going like that. It's a really unusual period of time.
Interesting.
So what do you do as an investor? Well, as an investor, you might go, well, let's get into a hedge position in US. So if you're going to buy the NASDAQ as an example, maybe you buy the hedged NASDAQ. You might say, what does hedged mean? Well, hedged means that they take a contract out called a futures contract that eliminates the currency risk. Because if you own, let's say, $1 million US, and the US dollar falls in value to the Australian dollar, you've lost money. That makes sense?
Yep. Yeah, it's devalued. Yep.
So let's just say that it drops 5% against the Australian dollar. Then if the market in the US has done 5%, you've made no money because you're investing in US dollars.
Yep.
It's dropped 5%. The market's gone up 5%. Net difference is 0. But you can pay a small amount in order to create futures contracts. That means that all you're exposed to is the market movement, not the currency
You can
movement.
pay some insurance to cover your bets.
It's insurance.
Yep.
It's insurance, and that's what the major super funds in Australia are actually doing right now.
But
So-
you lose the premium if it doesn't go your way, but at least you've got yourself covered.
Correct.
Yeah.
Well,
Yeah.
it depends on the contract. Some of
Yeah.
them, if it moves aggressively the wrong way, then you're on the wrong side of the trade, and
Yeah.
it hurts you quite significantly.
Yeah. So the point is, you can protect yourself, maybe.
Yes.
Yeah. Maybe.
Well, you absolutely can. It's just how you go about it.
Yeah.
But this is one of the major issues when you get into large fund dynamics, right? So when I say large fund dynamics, when you're with an Australian super or a massive bank fund, right? It's all funds in one big fund. You, me, 1,000 other people all
Yeah.
invested in one
Yeah.
fund.
Yeah.
And that fund has limited ability to move. When you're in these new things that they call managed accounts, which we need to jump into more and talk about in this forum, managed accounts are this mechanism whereby we can be in the same managed account. We can have the same kind of investment profile, but your journey is different to mine based on how much money you've got in and when you get in, right? And then they can trade individually very, very quickly to jump in and out of the markets, and our returns are not linked to each other, right?
So how's this linked back to the super funds?
Well, this is the problem. The big super funds are now linked into these trades,
Yeah.
whereby they have to hedge large positions, where if you and I were to jump into the market, we can get into a more dynamic type of investment
Yeah.
vehicle, which doesn't have the same problems of these large funds. So the question is, how does a large fund perform like a small fund? And there's instruments out there, and I think this is going to be very interesting for the future, because you've got the large Australian supers, Host Plus, Rests, all these big super funds that are out there. When markets start to have more challenging times, they're going to struggle to liquidate their positions, where smaller funds with different technologies are going to be able to transfer those positions based on the member, right? Because
So an internal market rather than an external market.
so just follow me here. $10 million worth of investment into a fund or into a property, and then I put $10,000 in, right? So I've got a tiny representation of this big fund, but then this big fund has to sell down 50% of its position, like what's happening here, sell down a big part of its position and realize capital gains. What happens to my holding in that? I'm $10,000, I've just got into the investment. What happens?
You either you might decrease your value because people are getting out, or you might lock in a value or something like that, maybe.
Well, I pay their capital gains tax even though I've only just
Oh, because
jumped
you're
into
part of
the
that fund. Yeah.
So I'm pulled in with this big vehicle that is moving in a rapid direction.
Because your shares are as a percentage of ownership.
Of theirs.
Yeah.
There's these new vehicles out there called managed accounts where you can kind of jump in and you can own
It's
your
independent
own.
of.
Correct.
Yeah. Okay.
And this is more of a technology thing, but it's going to be really interesting as more volatility comes into markets and we have to do big plays like what's happening here. It's going to be very, very interesting to see how smaller, more dynamic funds are able to perform in the market as opposed to these big behemoths.
Yeah. It used to be where if you could set the market if you bought so much or disposed of so much in one big lump sum, but now you want to be independent of that, or maybe you can jump in or you can jump out, depending on what you want.
Well, while the world has been going up at a rapid rate of knots, nobody cared. But when the world starts to shake and all of a sudden you end up with, month-long periods of time of negative returns and you have to move to that, that's where the ability to get in and out of markets really matters. So it's going to be very, very interesting. This is one to watch as to what happens with these large funds, is how they manage this market turbulence.
Market risks. Well, speaking of market risks, I've got one in my world that I wouldn't mind your opinion on, because right now,
Jesus, that looks like a roller coaster.
yeah, absolute roller coaster. Well, it's one of the things that don't get talked about enough, as far as I'm concerned, and often it's hidden. Often this stuff is hidden in indexes and share markets, because a lot of office buildings, a lot of industrial stuff is owned by public companies, right?
Yes.
So we don't see it doesn't become kind of the fodder of the news, like the first home buyer fucking bullshit, right? So you know, this is the thing. Right now, we're at the highest delinquency rate of B grade office office stuff
That makes sense.
in Australia ever in history. In history, worse than the GFC. The, you know, the
I
global.
bet you it'd be probably predominantly led by Melbourne too.
And I'm sure it is, and I could dive a bit more into these stats. But you know, if you have a look at stuff what's going on, you know, here's a couple of left field ideas that might be out there, right? So there's you know, this is kind of like, okay, offices, you know, maybe in B or C class locations, people don't want to go back to the office. You know, the kick in the can.
So what exactly is this before we get going? So this is
the delinquency rate. So when you have a rent roll, when you manage properties for rent, whether it's commercial, residential, or something else, there is always a number of tenants that are behind on their rents or delinquent on their commitments.
Yep.
So you know, the global financial crisis, there was a lot of, you know, issues when it came to the world of you know, people paying their rents in the world of commercial, and you know, in residential it happened in Australia a little bit, but
Yes.
But right now, you know, there was mechanisms in COVID
that allowed you
Australia
to kick it down the road.
kick it down the road.
Yeah.
The banks said you could delay your interest payments. The landlords had to eat some shit. You know, everyone.
It was a big shit sandwich.
It was a
wasn't
big shit sandwich, right? So, you know, everyone had to sort of take a hit, folks. But this is the interesting thing, Andy. Like, you know, everyone said, all right, maybe when was COVID over? What was it? You know, was COVID over in 2023?
It's still here in Melbourne.
Well, that's right. So the effects of it, maybe the lockdowns and whatever, maybe finished in, you know, late 22, 23.
Yes.
Maybe the world's got back to normal. It hasn't got back to normal.
No, not by
Not by a long shot.
Even travel is only just starting to normalise.
You know, people are going back to offices. You know, they're all kicking up a stink. Melbourne's doing some dumb shit again. But,
A 4-day work week.
A 4-day work week.
Let's have more debt.
Yeah. Let's have
Let's
more
work
debt.
less.
Let's-
and we'll just rub a genie
Yeah.
to get out of this.
It's like, and again, it's vote buying. It's not economic policy.
No. Oh, it's
This is
destroying
the
future.
madness of our situation. Like, you know, let us pander to all these people who are going to vote for us, you know, not look after the economy. Like, it's fuck,
It's
man.
outrageous.
It's
You
outrageous.
won't make a good politician.
No, I wouldn't. I'd be a terrible politician. I'd never get voted in anyway.
So this is delinquency rates are almost at the same level as the middle of COVID.
No, the opposite. Middle of COVID was the lowest we've ever seen. Well,
I beg your
yeah.
pardon. Yes.
But so we've got some issues, right? So people, you know, so here on the flip side here is like this is not being talked about, but also there's an opportunity in here. I think there's going to be some transitions, some changes in existing buildings. If some governments,
Rezoning.
you know, if any government's listening in, you might want to fucking pay attention. But they have an
Hang on.
opportunity.
This is wealth, wine, and whinging, not wealth, wine, and wisdom.
Well, if there was any wisdom in any of the political parties when it comes to, we need to increase the supply to the market. There are existing buildings that are probably maybe substandard, substandard locations, whatever it might be. The ability to transform those buildings into residential,
Huge.
actually is massive.
Massive. It's happened before.
Yep.
Like you go down, there's the lofts in New York.
Yep.
Right, because New York was never a big city.
Totally.
It was a small city, and
Yep.
it had
Yep.
industrial hubs far deeper in the city than what they ever were, or what they are now. And you see those incredible lofts that they've got.
I've got one vote. Thanks, Courtney. All right, I might run. But
We
listen,
don't want productivity.
I think this is the thing. There are alternative ideas when it comes to solving my world's problems. Anyway, when it comes to investing, so keep an eye on this one. If something happens, if someone smart gets in, I think this one's a great one to keep an eye on when it comes to this world.
Well,
I don't think they're going to solve these B and C class commercial areas. I don't think people are going to go back to work in that way. I certainly, as an employer, look at offices now as a differently. I'm like, oh well, I'll have it if it's really necessary. Before it wasn't even a question.
That's a great point.
You know?
Like
Yeah.
I was living on the Upper West Side of New York for a little while, and a lot of the Upper West Side used to be office buildings.
Yeah. Yep. And it changes. Well, these are some of the things that I think people should keep an eye on. And what was the other one I was going to show as well as part of, and we'll finish up in a minute. My iPad's lost its mind up here. This is what I thought was interesting, Andy. Trying to solve the property supply problem. Doesn't matter which political party's in place. Like check this out.
I saw this article, actually.
So we've got the Minister for Affordable Homes, but he owns seven investment properties. Now, I'm a big investor. I'm a massive fan of being an investor. But this stuff is like, is this guy going to do the best thing for the affordable homes portfolio property? And
somebody who looks like you'd like to shake him by his head, by his ears.
And this is the other thing, the increase in HEX debt, has grown tenfold from 700 million to 7.2 billion.
Oh, another great government initiative.
7.2 billion, folks. And guess what? It's that bad now. They said, oh yeah, we'll forgive you. Yeah, but who do they owe the money to? The taxpayer, not the government. The taxpayer funded it, folks. Just so we're all clear. Like, the government didn't give anyone any money. You and me paid our taxes. Now, arguably, I think the system should have a better way of educating our people. But at the end of the day, you run up a debt. Now it's too much, and now you're squawking about it. And so now the taxpayer's got to foot the bill for people who haven't even got fucking jobs. Like, seriously, I think that's bullshit. But at the end of the day, these are the things that are going on when it comes to some of the policies that are floating around out there, Andy. But listen, I think we may have even come to the end of today's episode, mate.
I think we're going to get called soon.
Yeah, we are. But folks, we're going to come live to you from over in Malaysia. So we're travelling over to Malaysia. We're going to KL, Kuala Lumpur. We're going to an event over there called Nomad Capitalist, which is an event, really interesting event, international attendees talking about, when you've created wealth, you don't always have to live in one place if you're treated, averagely when it comes to tax and citizenry. At the moment, I'm still a big believer in Australia. I think Australia's got some great things going for it. Just think at the moment some of its politicians are morons, and they can do better. But listen, we're going to go find out some alternatives. We're going to meet some interesting people, and we're going to report back to you. We're going to come live to you next Friday from Malaysia and report back to you on what we found out about the rest of the world and how they manage their wealth affairs. I think it's going to be an amazing trip, Andy.
Well, it'd be good to hear. We're a little bit insular because we're always talking Australian politics and things of that nature. But it's not different. Like we've talked about the UK on this program.
Yes.
There's similar things happening over in the US. Europe, depending on where you go, is either very, very solid or a basket case. So there's a lot of movement of investor funds, where companies are domiciled. So it'll just be good to catch up with different people, different perspectives, different issues, and figure out what's going on out there.
Yep. All right, folks. Well, that's it from us this evening. Thanks for joining us. Hopefully it wasn't too bad coming to you live from the Brisbane International Airport. Other than our mate vacuuming right behind us, I think.
And please don't underestimate how much of peanuts we feel like.
We're in a full cafe now. We look like a bunch of wankers, but anyway, then we do that for you guys. Anyway, there you go. All right, folks. Take care. Thanks for joining us on Wealth, Wine and Wisdom. We'll be back again next week, like we said, live from Malaysia. So that'll be interesting and fun. All right. Thanks for joining us, folks.
Thanks for watching another episode of Wealth, Wine and Wisdom.
Make sure you like, subscribe, and turn on the notifications so you never miss a thing, folks.
We'll look forward to seeing you next time.
Debrief the week with Wealth, Wine and Wisdom
Every Friday at 5 p.m. Victoria and New South Wales time. We know that Queensland, South Australia, WA have different time zones, as does Darwin, but we're sure that you can do the calculations depending on whether it's daylight savings or not.
You can also catch up on all the episodes